Welcome back, students, to Accounting 2302, Managerial Accounting. Once again, this is Dr. Mercado speaking, and in today's lecture, we're going to be covering problem 25-3A. Okay. Now, it's very important, like always, to read. Now, this particular problem deals with differential analysis for sales promotion proposal. I love these kind of problems because you get to compare two different options, and then based on the outcomes, you get to choose the option that works best for the company. So this is something that you can apply to any business sector. If you are unsure about a decision that you have to make, you don't have to guess. You can run the numbers, and that will give you the best option for you. So this is something that is very applicable to any business. Okay. Now, before we begin on differential analysis, make sure that you do read the section dealing with differential analysis on your ebook. Differential analysis is sometimes called incremental analysis. It analyzes differential revenues and costs in order to be able to determine the differential impact on profit of the two alternative courses of action, and then based on that, you make a decision. Now, differential revenue is the amount of increase or decrease in revenue that is expected from a course of action. So there's something that we're going to be doing, maybe pushing a specific product, investing a specific campaign. How would that yield an effect to the products? Okay. Differential cost is the amount of increase or decrease in the cost that is expected from a course of action as compared to an alternative. Okay. Then we have the differential profit or loss, and this is the difference between the revenue, the differential revenue, and the differential cost. Okay. So the differential profit indicates that a decision is expected to increase income, while a differential loss indicates that decision is expected to make or decrease your income. Okay. Now let's go ahead and apply this to the scenario that we have. I already have it set up here. So we have Risa Cosmetics Company is planning a 1-month campaign for March to promote sales of one of its two cosmetic products. So we have to choose which of the two cosmetic products we're going to push in this campaign. We have a total of $200,000 that has been budgeted for advertising, contests, redeemable coupons, and other promotional activities. So that is the budget. This campaign is going to cost us $200,000. The following data has been assembled for their possible usefulness in deciding which of the products to select for that campaign. And then we have the two products. We have the moisturizer and we have the perfume. The moisturizer is sold at $15, the perfume at $24. Then we have our unit production cost. This is to manufacture the products. We've got materials of $2 for moisturizer, $4 for perfume. The labor is $2 for moisturizer, $4 for perfume. For the variable manufacturing overhead, $1 is allocated to the moisturizer, $2 is allocated to the perfume. The fixed manufacturing overhead is $2 for the moisturizer and $6 for the perfume. So our total unit production cost is $7 for the moisturizer and $16 for the perfume. So it's much higher it costs us a lot more to produce perfumes than moisturizers. After that, we have the unit variable selling expenses, $1 and $2 respectively. And we've got the unit fixed selling expenses of $1 and $3. Our total unit cost is $9 for the moisturizer, $21 for the perfume. Thus, our operating income per unit is $6 for the moisturizer and $3 for the perfume. It says here that there is no increase in facilities that would be necessary to produce and sell the increased output. It is anticipated that 75,000 additional units of moisturizer or 60,000 additional units of perfume could be sold from the campaign without changing the unit selling price of either product. Okay, so we've got all of the data we need. Requirement 1, we're going to prepare a differential analysis as of February the 17th to determine whether to promote the moisturizer, which is alternative 1, or the perfume, alternative 2. Okay, so we've got the table set up. We've got the first row where we're going to enter the information for the moisturizer. We're going to have the second, which we enter information for the perfume. And then at the last, we have the differential effect, where we're going to compare alternative 2 with alternative 1 to see what happens. Okay, so let's begin with our revenues. Okay, how much money are we going to generate off of this special campaign? Okay, well, according to the problem, let's get our calculators out. Okay, according to the problem, it is anticipated that 75,000 additional units of moisturizer will be sold for that campaign. So we're going to get the 75,000 and we sell each of the moisturizers at $15. So we're going to multiply by 15 and that gives me 1,125,000. So that is the amount of revenues, of additional revenues that we anticipate to generate off of this campaign. So we've got 1,125,000. We're going to do the same thing for our perfumes. For our perfumes, we are anticipating selling an additional 60,000 units. Down here, we have the 60,000. So let's make sure that we mark, where am I getting this information? We're getting the information from down here, okay? That way you don't think I'm making it up on my head. No, I'm not. It's coming from the problem, okay? So we've got the 75,000 and we've got the 60,000 there. Okay, so now we know we're going to, if we run this campaign to the perfume side, we're going to be selling an additional 60,000 perfumes. And we sell each perfume at $24. So that's going to give me 1,440,000. So now we're going to do the differential effect. We're going to compare option 2 or alternative 2 with alternative 1. So we're going to subtract alternative 2 to alternative 1. And that will give me an increase of 315,000. So right now, if I were to select one of the two, alternative 2 will yield the highest revenues, an additional $315,000 of revenues. Now we're going to have our costs. Okay. Our costs are those costs associated with manufacturing either the moisturizer or the perfume. So we're going to start off with our direct materials. Okay. So for our direct materials, remember for the moisturizer, we've got 75,000 that we're going to be selling according to the problem, an additional 75,000. My materials for the moisturizer is $2, so that would be 150,000. Now these are expenses. They're going to be entered with the minus sign. Okay. Let me go ahead and, okay. And then let me just format all of these cells. Okay. That way I know. Okay. So that would be my direct materials for alternative 1. Now I'm going to do alternative 2. Remember, alternative 2 is 60,000 units at $4 a piece. So it's going to cost me $240,000 to manufacture for my direct materials for the perfume. So now we're going to get option 2 minus option 1. Okay, so that's going to give me, if I go with option 2, it's going to cost me $90,000 more than option 1, which is bad. Okay, we have extra costs here. We're going to repeat the same thing, but now we're going to do labor. For labor, we're going to go ahead and we're going to pick up, remember we're doing moisturizers at 75,000 units at $2. That's going to be 150,000. Okay. For alternative 2, we've got 60,000 units at $4 a piece. That's going to be 240,000. So I'm grabbing the data from over here from the table. If you are wondering where am I getting the information from, this is where I'm going to be getting it from. Okay. Okay, so now we've got the direct labor. Now we're going to have the variable manufacturing overhead. Okay. So we're going to start off with 75,000 for my moisturizers. We've got 75,000 moisturizers at $1 a piece. That's going to be $75,000 for my variable overhead, my variable manufacturing overhead. For my perfumes, I'm going to have 60,000 perfumes at $2 a piece. Here for my variable manufacturing overhead, it's going to give me 120,000. Okay, so we're going to get the difference between the two. And that gives me 45,000. So you see, so far alternative 2 is yielding higher cost than alternative 1. And then we're going to have the, we've got the variable manufacturing overhead. Okay. And then the fixed that is not going to be impacted because that does not change. The fixed manufacturing overhead will stay as is. Now, the only other thing that we have to incorporate is the, okay, so we've got that. Let me see, what are we missing? We've got the 150, 150, 75. Okay, so we should have another item. Okay, we should have the unit variable selling expenses. Okay, so that one should also be considered. Anything that's variable is going to change because we're going to have to sell more units. So the variable components need to change. The fixed components will stay as is. Those amounts are fixed regardless of the quantity that you produce. So when we're looking at the data, we always have to include materials, labor, and overhead. And then if we have any additional variable expenses, we include those as well. In this case, we've got a variable selling expense. So we're going to bring in the variable selling, okay, okay, right here. So we're gonna do the variable selling expense, okay, and we're gonna have, let's get our calculator. We're gonna have 75,000 at $1 a piece. It's gonna be 75,000, and we're gonna have 60,000 at $2 a piece. We're picking up these right here. It's going to be 120,000. Okay. So we have an extra 45,000 in cost if we go with alternative 2 versus alternative 1. Okay. And then we have one big item in addition at the end. We've got the sales promotion. Okay. We have decided to invest, regardless if it's alternative 1 or alternative 2, we are going to invest $200,000 for either alternative. So regardless, we're going to have a cost, whether it be for the moisturizer or for the perfume, of $200,000 depending on the campaign that we choose. Okay. Now that we have that, we're going to go ahead and we're going to calculate the profit or the loss. Okay, so we're going to go ahead and we're going to get the revenue less all of the expenses. Okay. And I think because they're negative, I need to add them. Okay, so let me see. So let me, it will be that plus that. Okay, and I'm adding them because on Excel, I would need to add them because they're already negative numbers, okay? So it'll be 475,000 profit for the moisturizer. So we're gonna do this 1,125,000 just to confirm, minus 150,000, minus 150,000, minus 75,000, minus 75,000, minus 200,000. So that gives me 475,000. Very good. Okay, now we're going to do the same thing for our perfume. This is the money coming in, okay, and then this is all of the money coming out. So that's going to give me, did I add correctly? Let me see. Oh, I missed one. You see, sometimes we have to double check our work. There we go. So we've got 520,000 profit for the perfume, okay? So now we're going to compare the perfume to the moisturizer, okay? So if we choose alternative 2, which is the perfume, it's going to yield us an additional 45,000 in income versus if we choose the moisturizer, okay? So based on this calculations that we have done, let me delete this, okay? We can say that Razor Cosmetics should promote the perfume. It will yield a higher profit than going with the moisturizer. Okay. So based on our calculations comparing our revenues and our costs, if we go with option 2, it's going to yield a higher income by 45,000 if we choose option 2 over option 1. Okay. Now, the second requirement, the sales manager had tentatively decided to promote moisturizer, estimating that operating income would be increased by 250,000. So the manager picked up the operating income, okay, and multiplied it by 75,000 units to come up with $450,000. And then from there, they took out the 200,000 promotion expense. The manager believed that the selection of the perfume would reduce operating income by 20,000. So he got the $3 operating income times the 60,000 units for a total of 180, less the promotion expense of 200,000. So that would give a negative number. Okay, so you would be in a loss. You would have a loss. Okay, now that we have done the actual calculation, they're asking us to state briefly your reason for supporting or opposing the tentative decision. So based on what we have just calculated, we know that we're going to promote the perfume. It gives us a higher income. Okay, so now that we know that, we can say that the sales manager's tentative decision should be opposed. We're not going to agree with it. And I misspelled tentative. Should be opposed. Okay. The sales manager erroneously considered the full unit costs instead of the differential. That's your additional revenue. And differential additional costs. So the person was picking up the operating income. On this example, they picked up the 6 and the 3. So what are they doing here? They're picking up these numbers down here, which is incorrect. Why is it incorrect? Because those numbers account for, okay, those numbers include your fixed costs, which were not going to be impacted. Okay, so we're picking up the incorrect amounts. That's why we are calculating a loss for the perfumes. Okay, and we are calculating, what did they calculate? An income of 250 for the moisturizer. Okay, so the manager that was doing these initial calculations picked up the operating income per unit, but we know that we should only be including materials, labor, any variable costs. In this case, we've got variable manufacturing overhead and unit variable selling expenses. Our fixed manufacturing overhead and our unit fixed selling expenses should not be considered in the equation. Thus, this is the correct way to do it and do a comparison between the two alternatives and then come up with what works best for our company and the decision that's going to be made. Okay, so as you can see, all of the data is provided. It's just a matter of organizing it. A common error that I see is students do not put these numbers down here, your cost, in negative. They need to be in negative because this is an outflow of cash. This is money leaving the company. Okay, so please make sure that you remember for your costs, they should be in parentheses or with the negative sign. Okay, so fairly easy problem. Everything is given to you. It's just a matter of organizing the information. If you have any questions or concerns, please do not hesitate to contact me. I am available during my scheduled office hours. Please refer to the course syllabus for that. And that would be it for today. Until next time, have a wonderful day.